So yesterday's high, yesterday's low, and we come all the way down during the Asian session. This is the European Open, and we get an up thrust, right? Okay, we talk about how good the European hours are. Absolutely fantastic trading.
That is crazy. Are you trading European hours now?
I'm trading a lot more, yes. I'm a lot more proactive in the European hours.
Why? I know that you're not the why kind of guy, but why do you think the European session now gives so much?
I know why. Liquidity. It isn't what it used to be. Back then,
it makes sense because everybody can access now European markets and Asian market at the same time, right?
It used to be so thin. We're in a downtrend. This is the European session up thrust, and we spring, fails, doesn't get to the high. We test again, doesn't really get to the swing high. Then we spring the spring, and then for me, this is all information here. Look, then we spring this spring over here, and look at that rally moment. Bang, failure of a spring. That's it's weakness, and this is holding this structural integrity of this supply line. We come down to an important level, yesterday's low. As we all know, yesterday's highs and lows are incredibly important areas of the market. Lots of eyes, different styles of trading come out at yesterday's low, and that's the bounce we're met with. Very, very limited. And then we come back, and then look, inability to rally, then bang, we fall down, and then acts as resistance. Okay, so a bit of weakness. And then we come down to the channel, and we become oversold. I see a bit of volume. I'm thinking, well, as you would do, Roman, this feels a bit climactic, doesn't it? Popping volume, we're oversold in this trend channel. What develops from here? And then we come up, and then we hold this tight trading range. And I'm like, oh, well, that's interesting because for my analysis and the way I view the market, when we have this climactic action and we rally up and we hold a higher level of support like this, and we're not testing down on the lows, it doesn't scream weakness. It's just logic, isn't it, Roman? Like, why are we testing down here? That's my thought process. This is the open. We come up, we come down. I'm like, okay, we get a good rally up, good price through here. We're oversold, inability to react. We hold this higher level of support. Then I see this little bar, kind of it's effort versus result, slight effort versus result. And then I was like, okay, on this bar, it kind of feels like a back up to the edge of the creek. Trading range, we come up, we test, we hold. I thought, I'll open a position here. You stop under here, whatever, little probe. And then the very next bar, Roman, boom, look, a better close. So I have to add ease of movement to the upside. This is telling us we're going to go up, more so than here. Okay, fantastic. And then we break on up, we push on up, and then we react. And then I see this down bar, and I've got a little diamond here, Roman, because I'm thinking, well, look at the volume. There's no real supply here. It doesn't interact with my structure. And I was like, oh, I want to add here. I want to add, but I didn't. What are your thoughts on adding here, Roman?